Hey, Empower You. I am super excited because today we're going through the 2022 NextGen Homebuyer report. Now, this is something that has actually come out in November, December of last year, but they do it once a year. And I wanted to go through it so we can show you what your clients are looking for and what the thoughts that they're having as they're able to buy or not able to buy. So let's dive right into this report. Let's see. Here we go. There we go. Okay. So it is important to know that it was sponsored by National MI. So obviously that's huge because this took a lot of time and money to get done. And skip through some of these background there. And let's talk about the methodology. They had 1,000 people that they responded to this through survey and in-person interviews. All the data was collected in October of 2022. And then the ages were from 18 to 44, broken down into three segments. So you had Gen Z, which is your 18 to 24-year-olds, your younger millennials, 25 to 34, and your older millennials, 35 to 44. And it's important to know that there was a diverse sampling here of race, income, and all different population demographics when doing this. And just to let you know, 51% of them are already homeowners and 22% of them have purchased in the past year. So breaking down the demographics a little bit more, you can see it was 52% female. The age you can see was broken up pretty evenly. Gen Zers was slightly less because if you look at the other two age groups, there's about 10 years there, a little less on the Gen Zers. And that's just because by the time you get to age 25, you're considered a young millennial. And under 18, obviously, you're not buying a house. So that was why it's a hair off there. The race and ethnicity, I just wanted to let you know that AAPI is Asian American Pacific Islander. Whoops, sorry, hit my mouse. And then it obviously broke down the demographics as well. And the 2022 report, along with 2021 and 2020, can all be found at nextgenhomebuyer.com if you want to dive deeper into any of this. Now, it's important to know that according to NAR, this report accounted for 46% of home buyers. And that's because you still have Gen Xers and baby boomers buying houses that were not included in this report. But what we are looking at here is the next generation of home buying. So that's why we're looking at the age demographics that we are. Now, I call this the spoilers page, right? Because this was the top insights, the most fascinating insights that came out of the report that we are going to dive into. So education. This is a huge barrier. It's a huge challenge. There's a lack of financial knowledge out there for the next gen respondents. They just feel that they did not have the knowledge that they should. Support. There is, a lack of advice and support out there. 44% of them felt they do not have the financial advice and support to buy a house right now or to meet their financial goals. Number 3 was a lack of confidence in the housing market and in themselves. Number 4 was trust. There's a big distrust out there when it comes to providers and professionals of all types. So we're going to go into that. And experience. Now, this was pretty much the same across all 3 segments. And we're going to show you that you do need the social media accounts and stuff like that to get in front of these people, but then they actually will give you a higher review if you meet with them face to face. So they want to be educated online up front, but then they do want to meet face to face if at all possible. So these are the 5 areas that we are going to break down, and we're going to start with financial challenges. So the question here is, what have been the biggest financial challenges let me rephrase that. What have been the biggest challenges to your financial situation this year? Now, remember, this is for 2022. It's no surprising that high cost of living was the most expensive, right? 2022, we saw inflation over 9%. So high cost of living is something that we would expect to see on there. But number 2 is mental health and anxiety. So think about that for a second. That's not something you saw with the older generations. Mental health and anxiety is a big challenge for these next geners. And then a personal financial knowledge or the lack thereof, and having too much debt. So it kind of goes hand in hand with the insights that we just saw. Now, when you break it out by income, you see upper income in yellow and low to moderate income in blue there. And low to moderate income respondents were significantly more challenged than upper income when it came to cost of living, mental health, and debt, which, it makes sense that they would, because if they're making less money, then obviously it's harder for them to pay for things. Upper income respondents were over twice as likely to say they did not experience any financial challenges this year. And again, when you are, you have the extra financial means to play with, or some money in savings, it does help you with the increased cost of living. When you break it down by age, and this was the only question that we saw younger millennials stand out against the others. Younger millennials reported the most challenges out of any age group here, reporting higher in mental health and personal financial knowledge. Gen Zers respondents were significantly less likely to report challenges in cost of living, debt, and healthcare costs, which can likely be attributed to parental support. So remember, Gen Z is age 18 to 24, right? So a lot of them are still in college, they're still living at home. You can stay on your parents' insurance until age 26 now. So that's why they're not seeing the healthcare costs. So it makes sense that they were the least significant when it came to those things. When you break it out by gender, women respondents were 36% more likely to be challenged than men in mental health and anxiety, and 21% more to be challenged with job stability. Now, this actually goes back to what is believed for the COVID pandemic. Women were hit harder than men on this, for the reasoning of, kids are now home from school. Women were the primary people that were educating them. I'm not saying men didn't. I'm just saying that the women were the ones that were tended to be at home. They left their jobs a lot quicker than the men did as a general state. So that is why it is expected that women have that job stability or challenge with job stability. When you break it down by race and ethnicity, the Asian American Pacific Islander reported significantly higher challenges in cost of living, mental health, and healthcare costs as compared to other segments. And others saw minimal variance in reported challenges across other race and ethnicity. So let's talk about knowledge and education. Now, financial education is a huge barrier, and I'm surprised this number actually didn't come in higher. 1 in 3, so 37% of NextGen consumers said they did not feel confident in their knowledge of personal finance. Education in 2022. When do you want to learn about personal finances? Where do you go? So it's no surprising 98% of them go to Google if they go online, right? That's not surprising either. But take a look at those other ones. What I like to show here is social media and parents. 40% go to social media, 41% go to parents. It just shows you that parents really don't have that much say or that much influence over their children. Social media is practically tied with it. So Gen Z were significantly less likely than millennials to go to a bank or credit union for financial advice. It was 21% or 27% versus 44%. So they rather go to an independent mortgage company rather than a bank or credit union, and an independent financial advisor than a bank or credit union when it comes to advice. The Latino community were the least likely demographic to go to a financial advisor or a banking institution for advice. Now, this we believe is because, if you think about their culture, they really focus on each other and helping each other out. So that's why we feel they were like that. And AAPI were significantly more likely than any other race to go to their family or friends. And I said Latino, but I really mean AAPI as far as going to family. That's just their culture. So young and multicultural consumers are the least likely to turn to a bank or credit union. So white next-gen consumers were 60% more likely than a Latino consumer to turn to a bank or credit union for financial advice, and 53% more likely to turn to a financial advisor. So they like the independent people and not the banks or credit unions. Now, this one, as a real estate agent, you should not be shocked at it, but you should be shocked at the percentage here. 77% of next-gen home buyers and homeowners said they believe you need 20% down on a home, or they just weren't sure. So, think about that. 77% of people think you need 20% down, or they just don't even know what the minimum down payment is. That means we need to be out there educating the consumers out there. And these are some facts here along the right-hand side of myths that came out of the 2021 report that are important to note. They believe they need to be a W-2 employee and work a traditional job to qualify for a mortgage, and that's just not true. Student debt and car loans will prevent me from qualifying for a mortgage. I'm not going to say it's not going to make it more challenging because your debt to income's higher, but it's not going to prevent them just because you have them in and of itself. And the financial crisis will happen to me. Think about that for a second. You have people that, when the financial crisis hit in 2008, that was 20 years ago, and I was 14 years old. So it was 14 years ago, not 20 years ago. Oh my goodness. I was in my 20s at that point. So, and I'm an older millennial. You think about it. The older millennials lived through it. The younger millennials watched their parents go through it. So they're scared and they don't want it to happen to them. So this is where our education comes into play. So 1 in 5 next-gen home buyers, 18% said they did not feel confident that they knew how to maintain or care for a home. So this is important because in the mortgage industry and in the real estate industry, we're all wrapped up into, hey, let's get these people educated, let's get them through the process, and then we drop them, right? And they're saying, hey, we don't know how to maintain a house. So this is our opportunity to not just drop them once they settle, but to actually take them the whole way through and teaching them how to educate themselves. And the 2021 report came in saying that home buyers felt a lack of confidence in any step of the home buying process. So not just afterwards, but any step. Now, social media platforms, look at this. It's no surprise these top 3, YouTube, Instagram, and Facebook. These are where people are going. Older millennials were significantly more likely to use Facebook, YouTube, Pinterest, and LinkedIn compared to Gen Zers. And that's because your Gen Zers are where? If you follow me, they are on TikTok and they are on Instagram. So you need to make sure that you are on multiple platforms to reach out to these people. And it's also, this stat came in, the Latino respondents were most active on Instagram, 15% more than any other platform. And Black respondents were more active than any other race or ethnicity on YouTube, Instagram, TikTok, and Twitter. Now, I know it's a lot to do all of those, but remember, you can record content, multi-purpose it, put it on multiple channels so you don't have to redo stuff. But I'd say it's important to be on Instagram because that seems to be the one that's triggered into all of them. YouTube is great for shorts and long form. So you can't do long form on the other platforms very well. That's where YouTube comes in. Advice and support. Only half, 56% of next-gen consumers said they have the financial advice and support they need to achieve their financial goals. Remember, 44% of next-gen consumers say they don't know how to meet their financial goals because remember, they're not really educated in school anymore on this. So this is a huge barrier to overcome, and it goes along with the educational and the confidence in the home buying process that we do need to address. And those that reported this, that felt they had the greatest access, access to support were upper income, white, older, and male. So I had the professionals. This is hard. I had the professional financial advice and support I need to achieve my financial goals. Men were consistently more likely to do this than women, or to say this. NextGen women were 37% less likely to report having access to a financial advice than men. And it's also important, if you look over here on the right-hand side, there is still a significant divide across the genders in the NextGen finance. According to the 2020 NextGen Homebuyer report, men were over 3 times more likely to be investing than women and reported less stress about their finances. So you definitely want to make sure women are being taken care of here. And in the current report, the 2022 report, it said women reported less trust in housing and financial professionals, less access to financial advice and support than their male identified counterparts. And I actually just saw a story on the news this morning, and I believe it was a Bank of America report or survey that was done, and 19% of single women our housing market buyers are being made up of 19% single women, where only it's 9% single men. So women are wanting to buy, and they don't want to wait until they're married to do so. So when you look at it by race and income, upper income and white NextGen consumers were significantly more likely to report having access to financial advice and support to achieve their financial goals. Trust and confidence. Now, if you look at this report as a whole, there's 2 major themes: education and trust and confidence. Of course, they intertwine with each other in many ways, and there is a lot that we can do to fill this gap. While this report does seem as it's a little bit dim, lack of trust, lack of confidence, this report can actually be very optimistic, because it's saying that we can change, right? We can make this better. But in every sector, okay, there was a lack of trust. If you think about it today, looking around, how much do you trust your healthcare providers? How much do you trust the government? How much do you trust the media? And in fact, when we actually, I think it shows the next page, the U.S. Trust Index dropped below 50%, making the default motion according to the 2022 Edmund Trust Barometer, dropping 10% since 2017. That means as a nation, we don't trust people anymore. We have fallen below 50% in trustworthiness. So if you look at this, 70% of home buyers say they trust that their loan officer is going to help them make a good financial decision. 77% of NextGen homeowners trust that their real estate agent is going to help them make good decisions about the home. And only 64% of NextGen consumers say they trust a mortgage or a bank when talking finances. So that goes back to them wanting the independent, independent services out there. And the older millennials happen to be the most trusting out there. The Gen Zers were the least trusting across the board. And you can see that with the age breakdown here. So in comparison with millennials, Gen Z were less trusting across banking, real estate, and lending. Age did not have a significance on trust in banks and credit unions. So banks and credit unions, unfortunately, did not do well across the board. But you can definitely see how the Gen Zers, which is the center circle, they are the least trusting compared to younger millennials and older millennials. When you look at it by gender, men are more trusting than women when it comes to trusting their loan officer, their real estate agent. And I don't really know exactly why that is. My guess is from talking to some agents when we did this in person, we kind of all said, women are more likely to dive deep to get a better understanding to make decisions. They kind of do their homework a little bit more, where men just want to get it done, get it over with, and move on. So they tend to be more trusting as a whole. Looking at it by race, The Latino NextGen respondents were 56% less likely to trust their loan officer than a white respondent. And Black and African American respondents were significantly more likely to trust a bank or credit union in comparison with other housing professionals. And white NextGen homeowners were 22% more trusting of their loan officer than homeowners of color. So it is very interesting looking at that, how it is by race and how they trust different people. Now, confidence in housing. The majority of NextGen homeowners, 61%, report a lack of confidence in the stability of the housing market over the next 5 years, but were confident their home would ultimately be a good investment. Now, you and I all know that there's a lack of housing out there, so we know homes are a good investment. We know we're not in a housing bubble, but it's conveying that to the public out there and getting them on board with it. And this is just another way to say it. 4 and 5 NextGen homeowners said they were confident their home would be a good investment. And this ran, consistent with the 2021 findings. The housing market will remain stable over the next 5 years. 61% of NextGen homeowners said that they lack confidence in the stability of the housing market over the next 5 years. So men were 19% more likely to report confidence in the housing market compared to women. And Latinos were more confident in the stability of the housing market, reporting a 15% higher confidence than any other racial or ethnic segments. Upper income, 75% more likely to report confidence at low to moderate income. Looking at experience, only half, about 58% of NextGen home buyers rated their overall experience a 5-star rating. Now, this is the home buyers who bought within the last 18 months. So 58% of them say it's a 5-star rating. So why is that? Is a great question. What are we missing there that we can make it better for them? And I think a lot of it has to do with education, because the confidence will come with education. Gen Z and women rated lower satisfaction with home buying experience. NextGen men and millennials were 32% more likely to give a 5-star experience than a woman and other millennials. Experience matters. NextGen home buyers who met in person, 41% more likely to give a 5-star review versus buyers who only met over online video, and were significantly more likely to trust. And this is specifically to loan officers. And that's because loan officers, we're not out there showing houses. So we are having to meet them over video. A lot of them say they don't want to meet in person, but it's definitely an option that we offer. And it's something that everybody needs to be offering, because they do definitely want to meet in person, and you're more likely to get a better experience. So it's something you definitely want to take a look at. So that is the 2022 NextGen Home Buyers Report. I hope you enjoyed this. We'll be sure to bring you the 2023 NextGen Home Buyer Report when it comes out at the end of 2023, beginning of 2024.